Good morning, everybody. It's Wednesday, August 23rd, 5:29 a.m. Central Time. December corn futures up a half cent at 4.80. November soybeans down 11 and three quarters at 13.34 and a quarter. December Chicago wheat down 1.5 at 6.26. December Kansas City wheat down 3.25 at 7.44 and a half. December spring wheat down 1 3/4 at 7.90. Our friends on the Pro Farmer Crop Tour did another day yesterday.
They sure did. So, Pro Farmer released tour results from Nebraska and Indiana yesterday. The tour pegged the Indiana corn yield at 180.9 bushels per acre versus last year's tour estimate of 177.9 bushels per acre. The Indiana soybean pod count per 3x3 area was seen at 1310 versus 1166 last year. The Nebraska corn yield was pegged at 167.2 bushels per acre versus last year's tour estimate of 158.5 bushels per acre. The Nebraska soybean pod count per 3x3 area was seen at 1160 versus 1064 last year. So far, all of the tour's official state estimates are better compared to last year.
That last sentence is the big take home from the tour so far. Everything is better than last year. We've seen 4 states scouted, and the corn yield estimate and the pod counts for all 4 states are better versus last year. I feel like some of you guys may be getting a little too worked up about the tour and what the tour does. I don't think personally, first off, that this is meant to be a market moving event in any way, shape, or form. I do think last year the markets moved a little bit on the tour. We had a big rally in the row crop markets during tour week last year. Part of that was because we started to figure out that the crop wasn't there. Part of it was because we had some better demand coming in during the month of August. We had kind of a contra-seasonal row crop rally last year. I've seen a lot of talk about Pro Farmer versus USDA, like, oh my gosh, Pro Farmer's lower than USDA for this state. Why isn't the market rallying? And Farm Journal, that first of all, thank you to Farm Journal for these graphics that we're using here. They had this graphic out prior to the tour in which they kind of point out their historical differences in terms of the corn yield by state. So Farmer is almost always light in regard to corn yield in Nebraska in particular because of the irrigation factor, in Iowa and Illinois, in Indiana and Ohio. The 2 states where Pro Farmer is heavy versus USDA would be Minnesota and South Dakota. And I believe the Pro Farmer estimate for South Dakota, which they haven't done Minnesota yet, but for South Dakota was heavy versus USDA's current estimate. So I don't know, guys. I mean, everything that they found is better than last year. Last year, USDA had the corn yield at 173.3, the soybean yield at 49.5. So everything we've seen to this point, if you want to say, are we better or worse versus last year, which I think is the way to do it. I don't think you compare Pro Farmer's numbers versus USDA numbers. You compare Pro Farmer to Pro Farmer this year versus last year. Pro Farmer saying everything that they found so far is better than last year. So that's been the deal. The tour continues today. We will talk about it some more tomorrow.
A mostly dry forecast remains in place for U.S. corn and soybean areas this morning. The 7-day government map offers limited rain chances for parts of Nebraska and Kansas, while Colorado may see the best amounts. Some better chances also exist for Ohio and areas further east. The 10-day Euro and GFS models remain mostly dry for the Corn Belt and U.S. Plains. Heat will be a factor again today. Parts of central Iowa, Illinois, and elsewhere may see temperatures above 100 degrees.
Yeah, there's going to be a lot of 100 degrees. I think this map, this is the Euro version of today. This is actually a little cool for some areas, and those 100-degree temperatures go for the plains and the southern plains in particular as well. You've still got this excessive heat warning from the government for basically the entire central part of the country that's been in place for several days now. When you look at the soybean market, you would think that given this forecast and what's going on right now in terms of weather, that the market would be acting better. And this week has really been a big disappointment. On Monday, November soybean futures peaked at 1381, and we are almost 50 cents removed from that high this morning. So you had kind of a failed rally attempt on Sunday night into Monday. We were lower yesterday. We're lower again here this morning. As I mentioned yesterday, I've told the premium subscriber crowd this a million times. the correlation between weather and markets in the month of August is just not the same as it is in June or July. If you had this sort of forecast and pattern back in mid-June, you'd see soybean futures rally $1 per bushel in the course of 2 days. You actually saw that exact thing happen in mid-June during that initial crop scare event. So it's just it's I know that there may be some bushels being lost in some areas, certainly because of this hot and dry forecast, but the market is not acting the way that it would have, say, 6 weeks ago. It's still not a bad price action. I mean, I could draw you some trend lines on this chart and say, this is still an uptrending deal. But this week in particular, I think has been a disappointment for the soybean market, especially.
So, if you guys haven't already checked out our premium subscription, you need to do so. Joe, can you tell me about the video you put together yesterday?
I've told you guys this before. I'll tell you again. Every morning at the bottom of our email, and our email goes out at 5 a.m. Central Time every single business day. We wake up super early and put this thing together. At the bottom of the email every day, we track every cash grain sale that we've advised: corn, soybeans, and wheat, multiple crop years worth. In yesterday's video, I did basically a review of everything I've advised to this point for 23 corn, 24 corn, same thing for soybeans and wheat. Everything I've advised, everything broken down by crop year, percentage, and then a weighted average, and then kind of my general thought process in regard to cash grain marketing moving forward. If you guys want to see the premium stuff, go to standardgrain.com this morning. This is a $50 per month subscription. You can cancel at any time, no other fee, no other obligation. Nobody will try to sell you anything else. This is just a ton of info direct from us. Every single business day, guys. Takes you like a minute to sign up. All you need is your credit card. You can do it on your phone or computer. Check that out this morning.
USDA reported a flash sale of U.S. corn to Mexico on Tuesday. U.S. exporters sold 9 million bushels of corn to Mexico yesterday. Of the total, about 4.5 million bushels is for delivery during the 24-25 marketing year, and the other 4.5 million bushels is for delivery during the 25-26 marketing year.
It's just routine business that you need to see, but we haven't seen the business that we'd like to see. The business that you'd like to see would be China come in and buy 1 million tons here, 1 million tons there, and we just haven't seen that yet. We're seeing these smaller amounts to Mexico, and Mexico is historically probably our most reliable buyer, and this is just run-of-the-mill stuff that's not going to move the market.
Heavy rains continue to damage China's corn and soybean crops. The northeastern region of China is expecting more flooding as substantial rains fell earlier this week. 45% of China's corn crop and 60% of its soybean crop are produced in the region. Some fields are still being drained from torrential rains that occurred earlier this month. The excessive soil moisture levels have inhibited the growth of crops as expected. However, the 10-day forecast will bring favorable weather to help drain flooded fields.
So here's a look at this. This is China corn production. The areas that are problematic right now are these like northeastern areas that are in the dark green here. Here's the forecast. So the forecast is drier, and I've got that northeastern area circled. It is drier, but apparently these rains were enough to have done some damage. Is it enough damage to ultimately result in a bunch of additional corn imports? We don't know that, but it's a possibility. There's nothing in the market that suggests that to me right now. U.S. corn is on the edge of being competitive versus Brazil. We've been kind of back and forth. So I don't know. It matters when we see the sales, and we haven't seen the sales yet.
So, a bit more on China. Their soybean imports may be larger than projected. According to Chinese soybean buyers, China will most likely import 100 million tons of soybeans in 2023. USDA projected the Asian country would import 98 million tons. Soybean demand is expected to level out in the next 5 years, and imports will likely hang around that 100 million ton mark. China typically alternates its soybean purchases between Brazil and the U.S. Back in 2022, China's soybean imports totaled 91.1 million tons.
Okay, if China's going to average 100 million metric tons of soybean imports for the next 5 years, and not expand, that's a problem. Because guess what? Brazilian production is going to expand by, I don't know, 5 to 10 million metric tons every single year. So we had better hope here in the United States that everything we've been told about the crush expansion, the additional crush capacity, renewable diesel, all that stuff, we better hope that it's all true and then some, because if China's not expanding, but Brazil is expanding their soybean production in this really phenomenal way that they've been doing. I mean, they're adding acres, they're adding bushels every single year. The idea that China is just going to remain stagnant in regard to imports is a problem. Cattle futures were lower yesterday.
Yeah, they sure were. Feeders were 87 cents lower to a buck 42 lower. Live cattle were down 52 cents to a buck 25 lower. Box beef was up. Choice ended the day at 317.05. That was up 149. Select ended the day at 289.51. That was up 218.
Outside markets, not overly exciting this morning. U.S. dollars up just a little bit. Stocks are marginally higher. Bonds are up almost a full handle. Gold's up $4. Crude oil is down $1.12, and the November WTI at 78.23. Have a great day, guys. We'll talk to you Thursday morning.